Fed minutes today showing a couple of things. First of all, this committee is making no progress on better understanding the inflation mystery that confronted it in 2017. And second of all, it's a very divided committee about the risks it's facing going into 2018. First of all, a little bit about the dovish group. I get the sense from these minutes that the number of committee members that are growing concerned about inflation and inflation expectations is growing slightly. Here's an interesting excerpt from the minutes themselves. Several expressed concern that persistently weak inflation may have led to a decline in longer-term inflation expectations. Now, still, a majority of the committee clearly were in favor of the rate hike that the Fed went ahead with in December. And a majority of the committee are still expressing some confidence that inflation in the medium term is going to move back to 2%. But there's some sense that confidence in that is slipping a bit. And that matches up with the Fed Fund forecast, or the dots, that we saw last month. The median for rate hike projections next year is 3, but there were 6 committee members below that median. Now, at the same time, we've got another group, a more hawkish group. We know this is led by folks like Eric Rosengren in Boston, Loretta Mester in Cleveland, and they're very concerned about a more severe undershoot of unemployment in 2018, possibly leading to a bump in inflation. And here's another interesting quote I find in the minutes. Participants discussed several risks that, if realized, could necessitate a steeper path of increases in the target range. And they mentioned that those risks include the economy expanding well beyond its maximum sustainable level, perhaps owing to fiscal stimulus or accommodative financial market conditions. So again, a committee still bedeviled by low inflation and very divided over where they think inflation is going in 2018.